it's just like this terrible domino effect on the logistical side.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to visit with you about ag issues, ag markets, anything related to agriculture. And as a reminder, make sure you like these videos, subscribe to the videos by clicking the bell icon down below, and share these videos with others too. Well, today, as we wrap up the week, I want to welcome aboard Eric Relph of Comstock Investments. We'll talk about what we accomplished, if anything, during the past week. And, Eric, looking at the grain markets here, I don't know if we really did anything on Friday here as we came across the finish line. It seemed kind of indecisive, I thought.
Yeah, I think you've got a combination of a lot of people anticipating that maybe we should have higher prices and probably have seen a low, and I would be in the camp that we've probably already seen our low as we head into harvest here. But heading into harvest creates another dynamic. You've got a lot of grain moving to town, and you've got commercials hedging off that risk as it comes to town. So you get a lot of back and forth action. For the week, though, you finish quite a bit higher in the beans and a fair amount lower in the corn. And I think a lot of us would have expected about the opposite of that for this week, especially with the amount of bean harvest that's going on in the areas where it counts the most. And so a little surprising to see some of the trade action, but that's what we were fighting this morning. Was you were definitely seeing some of that commercial hedging early. Luckily, it waned as we moved into the latter half of the session, and we were able to mount a little recovery in the soybeans, but corn couldn't do the same, finished near the low of the day.
On the export sales this past week, do you look at that as being encouraging or disappointment?
Encouraging for beans, disappointing for corn. The weekly report was also very disappointing for wheat. We've had some really nice weeks. We've just been week over week of 500,000 tons of wheat, and that's been really nice and exceeding expectations there. Didn't see that this week. You had about half that this week at about 250,000 metric tons. Beans were, I think, 1.7 million. And so that was fairly impressive and something to hang your hat on. But corn, just over 800,000 was not as impressive and pretty lackluster compared to what we've seen for the last month or so.
All right, Eric, we have increasing tensions between Ukraine and Russia and now NATO. All the NATO countries and the EU, they're all just kind of at odds and extremely high tensions over there. I just wonder how much the increasing tension will mean for wheat markets around the world based on the Ukrainian supplies, the Russian supplies of wheat, and the ability or inability to get that wheat out of that area. Now, what's going on anyway?
Well, you had one headline early this week that Russia had hit a vessel carrying Ukrainian grain out of the Black Sea. So that was, you hear more little tidbits like that. It makes a big difference. But one thing I keep thinking about is something. My son's in the military. He's actually in Europe right now. He's in Germany working with a special detachment currently, but had been in Poland training Ukrainian soldiers. And he through talks with people in that region, they had concluded that if it ever went to full scale war and Russia had to enact their version of a draft, and I forget what it's called, but not really all that important. If they did that, then they would stop exports immediately of all feed stuffs, to include wheat, because they would need that to supply the massive military that they would then be operating at that point. And so I keep thinking about the potential of what if they push the West to the point where they will approve weaponry that can reach within Russia's borders. And if that does entice Russia to then declare war on NATO countries, and if you get the point. If all that happens, then we've got a major situation on our hands. Russia quits flooding the global cash market with fire sale wheat that they've been using to fuel their war machine. And Ukraine's fighting a war that they frankly need all hands on deck for at that point. And they're not going to have the logistical capacity to do anything with their grain. So it becomes a major situation if you go into a full scale war instead of this little tit for tat. We say that. I mean, it looks like it's little, little to us, but they're losing thousands of soldiers a week over this deal, and their numbers are mounting quickly. So anyway, to come around to the punchline here, this could turn into the biggest situation we've ever seen for wheat, but it's going to require some ingredients to get that there.
Well, wheat seeding is currently underway in the plains. What kind of conditions are we looking at now for the new crop?
Well, wheat in the dust and the bins will bust, right? Well, they've certainly got the dust to put it in, so hopefully that's going to be the case for them this season. But I fear, we've struggled so hard to break these cycles and the weather cycles, that is, and Dr. Elwyn Taylor's 89-year drought cycle hits dead on 25 for the worst drought, and that's going back to obviously the dirty 30s, the Dust Bowl era. And so I don't know if we're going to hold on to a La Nina cycle that long, but so far we've had a hell of a time trying to break out of any of these cycles, and the ENSO's just not been moving at the pace that most climatologists expected it would. So if that's going to be the case, we're going to have a dry growing season.
Well, and we're also dealing with, I believe, a grand solar maximum that's taking place. We have solar flares all over the place. That can have an impact too when you have things like that going on. It changes everything overall. One thing that happened this week, and I'll use this to kind of bridge over to the livestock trade talk. The Fed, of course, made their announcement this week. They want to drop their Fed funds rate 50 points. Okay, so now it's done, and everybody knows that. So apparently the grain market just kind of shrugged it off. What about the livestock trade? I saw where they had a pretty good performance on Friday.
It wasn't just Friday. It's been all week long. That's something I think's worth sharing here. If you don't mind, I'll pull that up right quick.
All right.
Got a couple of things I had kind of queued up here in case we got to talking about them. But okay, so we're going to look first at the stock market because that's obviously been the driver behind what's been going on in the cattle. With the exception of today, we've seen the stock market just kind of ripping following the Fed announcement. So I am on the weekly chart, and you can see the recovery from the low in the last 2 weeks. I mean, the Dow makes a low of 40,034 to this week's high of 42,586. So you're talking 2,500 points, and low to high in 2 weeks time, just massive moves there. And the S&P, same thing, and your new highs in both of them. Nasdaq's been similar action as well, although not as heavily traded in the futures market as the Dow and the S&P, but the last 2 weeks have been massive recoveries. Still haven't hit the highs that we saw back in the NVIDIA rage when the NASDAQ just took off and was making multiple legs higher and ultimately made its high that first to second week of July. So having said all that about the stock market, now you look over at some key contracts in the cattle complex. October feeders for the week alone, your low to high $5 move in the October, $5.50. November was $6.30 for the week. December live cattle up $2 today, but for the week, low to high up $6. So this was big moves in the cattle, and you can see some of that chart recovery. Although I would caution, I did throw some retracements up on a couple of contracts, and just looking at the October feeder cattle here, for example, we closed right at a 38% retracement of this move down from the middle of the year until these lows that we recently saw. So can we punch through that to start next week and carry on higher? Well, that's probably all going to be dictated by what we see here about 20 minutes after we're recording this in the cattle on feed report.
Speaking of the cattle on feed report, is the trade even going to care next week? Whatever the numbers are in the cattle on feed report this month here, is it going to focus more on the economy, do you think?
I'm a little bit mixed. The one reason that I think we might not goes directly to the overall economic outlook and we might actually trade the numbers is just because we're struggling in several fundamental factors. Cash cattle this week has been struggling, although we've only seen light numbers traded because cattle on feed weeks, you often see that. You'll see a lot of the trade happen after the 2 o'clock reporting deadline on Friday, which happens to be after the 2 o'clock release of the cattle on feed report. So, but you look at the fundamental factors. I mean, you've got average steer carcass weights last week at 941 pounds. That's 8 pounds above a week ago, 24 pounds above a year ago. That's a lot more beef with the same number of slaughter. I ran the numbers earlier. It's like 15 million pounds more beef in a single week's kill, same number of head. So they're figuring out these ways to get the beef they need. However, box beef's been another fundamental struggling point. The box beef's been struggling for about 2 weeks now. Now we have choice cuts trading under $300 a couple of days this week, where we had select above $300 for basically the entire month of August. certainly the second half of July into the first half of August before it started waning a little bit. So box beef's been a struggle. Cash cattle's a bit of a struggle. Feeder cattle cash have just been treading water, mostly steady this week with last, but it's been a drop for the past few weeks. So you need some kind of a fundamental trigger to turn this around a little bit. If the cattle on feed report doesn't do it, I think you're going to have a hard time following the overall economic picture, rather than saying, okay, this looks like a market that's struggling.
The thing that concerns me is the old saying that you need to feed a bull every day.
Yeah, that becomes a problem, especially when you have negative inputs coming from multiple directions in a given market, and we've got that in a lot of the ag markets, unfortunately, right now.
What about the time of year? How's the timing for staging a rally in cattle? Are we out of kilter there?
This is a piss poor time to try to mount a cattle rally for the fall. Usually you'll see some kind of a rally going into the end of the year, but it doesn't start yet. October is usually a bad month for cattle, and generally speaking, you get past that Labor Day demand, but you're not into the holiday season demand yet. They call it dead calf month. It's a difficult time of year for the cattle industry, usually here for about a 4 to 6 week period coming up. So thinking that we're going to get some contra-seasonal rally isn't the dumbest thing in the world, but it would be contra-seasonal, no doubt.
Now, how did the hogs stand? What's their stature in the overall trend?
Right now, look pretty good. I can't say anything bad other than the fact that they are overbought, and the cash market is not really moving a lot. We're not seeing it give up, but we're also not seeing any gains there either. And so, and you're up against serious technical resistance outside of just being overbought. You're within a couple of dollars of some overhead resistance in several key contracts, and so to think that the hogs are just going to keep running is a little difficult. But if you could get another couple of dollars, I think there's at least some hedging opportunities for these fourth quarter hogs.
On the other hand, you still have a big advantage at the retail counter, right?
Oh, huge advantage. The only thing that can even compare is chicken, and it's not a great comparison, but yeah, some of these better cuts of pork are just dirt cheap compared to what you can buy beef for. And it still isn't garnering the amount of the retail space that it should be right now, in my opinion. Export sales have been nice. Global demand for U.S. pork has been really good. But we're just not seeing the domestic demand increase like you would normally think when you've got $6 a pound hamburger versus $2.50 a pound chops.
Now, I know you talk with livestock producers all the time. Mm-hmm. And now that we're heading into grain harvest and we're just knee deep in the corn harvest right now, do you think that there's just going to be a lot of weakness in that corn market here for at least a couple of weeks, where maybe livestock producers can look at that as a real opportunity for their operation?
I would think so. I don't think we've got a big problem on our hands. I just don't think the market's going to go anywhere. I think you can take the optimism for U.S. grains, barring the dollar continuing to just climb higher and then overall economic outlook being negative. But barring a situation like that, I think people are looking at these prices as lower end prices, at least, if not bottom of the barrel prices. But you're still going to have people that have to sell to free up cash flow for whatever needs may need to be met. But you've got cash flow needs as this crop is coming out of the ground. So that hedge pressure is going to create the weakness that should provide the opportunity for feeders or end users to capture some needs immediately. And we're starting to see some of the bigger end users already push bids and try to get some of the earliest stuff that they can, and taking higher moisture than they normally would, paying up prices, basis levels that are way higher than what they would normally be this time of year. And so you're seeing the bigger outfits already pulling triggers and making moves to try to get some of that done. And I think that means, as a smaller end user, like your smaller cattle feeders and even your larger cattle feeders, they need to be thinking the same way.
Well, and again, I want to remind everybody and encourage everybody to check out your morning comments on our premium service. You author a morning video each and every day, every trading day, and bring up different points to consider. Very thought-provoking stuff that you bring up. And again, everybody can get access to that for the first month for $1 to check it out. But I assume you're probably covering things like, does it really pay to store that grain right now, given the way the market is? Basis is, like you say, is just wildly different You can go 50 miles and it'll change a lot, right?
Oh yeah, it's amazing the variability. That's one thing I've tried to print in our premium stuff for the last several weeks is variable is going to be the big buzzword this year, and it could be locally variable, it can be regionally variable, and it can be nationwide variability that we're talking about. But this is huge, and I'm concerned. I've been getting a lot of questions lately. Well, should I just sell this stuff that we've got some harvest going on. Yeah, well, particularly in this region, soybeans, and well, should I just sell it and take the $10 or whatever the cash price is, depending on where they're at? And right now, it could be anywhere from 40 over or 20 over to 40 under in a 100-mile stretch right here where I'm at, and that's the variability we're talking about. So when I'm posed with that question, I'm thinking about some of these movement logistic problems that we're facing nationwide. You've got Union Pacific and BNSF have embargoes on rail cars going to Mexico right now. You've got potential for a longshoreman strike coming up in the next couple of weeks. You've got you're talking East Coast and Gulf ports there. You've already got like a 2 to 3 week backup in LA and Long Beach ports. It's only a matter of time before Portland and Seattle are in the same boat. And now with the potential with the election season coming up and the potential for trade war and tariff situations coming, a lot of these tech end users are trying to get all their supply bought now to front run the election so that they can have a year or two worth of supplies so that they can wait out a potential trade war and have that one part that they need for whatever it is they're manufacturing. And that's creating a whole nother backup issue. So it's just like this terrible domino effect on the logistical side. So I'm favoring saying, take advantage of the good basis where you can get it, move the beans. If you're ready to store the corn, store the corn. We'll talk about that later.
And not to pile on, but this is all going to happen at the same time that they're planting in Brazil now.
Yeah, exactly. Yeah. Assuming they're going to get moisture, right? The Brazil drought has been one thing that's been kind of propping us up a little bit in the soybeans, and probably why soybeans finished higher for the week when the corn struggled. But that cycle is going to break at some point, whether it's in a timely enough fashion or not. But if it breaks by the second week of October, they're going to get done what they need to get done and still have time for the safrinha corn on the tail end of it. If it's the end of October, now we got something to talk about, but it's more impactful for the corn.
Well, Eric, a lot of ground to cover, and you did a great job. I appreciate that, and I hope you have a good weekend. We'll talk with you again next week. That's Eric Relph. He is with Comstock Investments, and again, you might want to check out his morning comments on our premium services here. That'll do it for this episode. Thanks again for joining us. Hope you have a good weekend. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.